How to negotiate seller concessions in Chicagoland. Used well, seller concessions are not giveaways. They're tools that solve real problems: cash to close gaps, payment affordability, repair risk, or timing. In Chicago and the northwest suburbs, the best deals align credits with the buyer's true constraints and the seller's priorities, so both sides move forward with confidence. What counts as a seller concession? Closing cost credit, a seller credit applied to allowable buyer closing costs to reduce cash to close. Rate buy-down contribution, seller funds used for a temporary or permanent buy-down to improve monthly payment. Inspection, repair credit, a targeted credit that addresses specific items discovered during inspection. Prepaids, fees, offsets, credits toward lender or third-party fees, prepaid taxes and/or insurance, as allowed by the buyer's loan and the purchase contract. Other structuring levers: home warranty, homeowners association move-in fees, or a rent-back or early occupancy arrangement when timing is the real pain point. Buyer strategy: ask for the help that actually moves the needle. 1. Make the math visible. When you request a credit or buy-down, show the effect on cash to close or payment in your offer cover note. Sellers are far more responsive when the benefit is concrete and the transaction still looks clean. 2. Targeted, not blanket. Instead of a generic price cut, ask for a specific credit capped to actual allowable costs per the loan program. Example structure: seller to credit buyer up to X dollars toward allowable closing costs and/or points. Your lender will confirm the maximums and how unused amounts are handled. 3. Trade certainty for certainty. Pair your ask with stronger terms: faster attorney review, quicker inspection scheduling, proof of funds for reserves, or flexible possession. The more certainty you give, the easier the credit becomes. 4. Tie inspection credits to findings. Request a repair-specific credit equal to reasonable estimates instead of asking the seller to manage work. This avoids scope disputes and protects timelines. 5. Keep appraisal in mind. Credits and concessions are subject to appraisal and loan guidelines. Ask your lender to confirm that your structure won't jeopardize underwriting or cap you out. Seller strategy: protect price and timeline while saying yes the smart way. 1. Prefer credits over headline price cuts. A targeted credit can solve the buyer's cash or payment issue while preserving comparable sale value and future pricing power for your neighborhood. 2. Attach guardrails. Cap and purpose. Up to X dollars toward allowable buyer closing costs and/or points. Performance-based. Credit applies for full price or above offers with standard timelines met. Expiration. If buyer misses key deadlines, the concession may be reduced or removed. 3. Use buy-downs as a marketing lever. Advertising a potential temporary buy-down with clear assumptions can broaden your buyer pool without repricing the home. Keep the remark concise and accurate. We'll help you model the scenarios. 4. Convert inspection friction into a clean credit. For non-structural items, many sellers prefer a credit at close over managing contractors. It's faster, reduces risk, and keeps focus on hitting the closing date. 5. Don't exceed what the loan allows. Different loan programs limit total seller contributions. We coordinate with the buyer's lender early so you don't agree to more than can be used. How Illinois Star Realtors structures win-win concessions. Buyer side: we map your true constraint, cash versus payment, design a concession stack that fits your loan, and present a credible documented offer. Seller side: we price to capture the most serious buyers, pre-plan acceptable credits, and script remarks that spotlight payment relief without diluting value. Transaction management: we align lender, attorney, and title milestones so the concession you negotiated actually lands on the CD at closing. Clean offer language you can use. Example clause: credit. Seller to credit buyer an amount not to exceed X dollars toward buyer's allowable closing costs and/or discount points. applied at buyer's discretion and as permitted by buyer's lender and contract. Example clause, temporary buy-down. Seller to fund a temporary interest rate buy-down in accordance with buyer's loan program. Cost not to exceed X dollars. Any unused amount to be applied to other allowable closing costs. Note: final wording belongs in the attorney-approved contract package. We'll coordinate so the language matches current forms and lender requirements. When a concession makes the most sense: strong traffic, light offers, at a clearly advertised capped credit or buy-down. Inspection surprises. Convert repairs into a right-sized credit. Appraisal tightness. Prefer targeted credits over headline reductions to support value. Timeline crunch. Use rent back or flexible possession in place of additional dollars. Talk to us before you negotiate a dollar. Every concession has ripple effects across price, appraisal, loan caps, and timelines. We'll model your options and script the terms so you walk into negotiations with confidence. Call 847-647-4000 or visit IllinoisStarRealtors.com and click on the Contact tab in the upper right corner. We will get your strategy in place today. You've been listening to Tom Dudzinski, Managing Broker of Illinois Star Realtors. Return tomorrow for another local market briefing, or connect today at IllinoisStarRealtors.com or 847-647-4000.